Hey guys, this is going to be a quick look at ES, starting on larger time frames and getting through as much as I can in 15 minutes. So let's start on the weekly log chart. I'm convinced that channels on the weekly log chart are one of the best tools for understanding market structure, bar none. They work over and over and over again. And in the last video, we were looking at this purple channel here for the current secular bull market. And we were saying how, we've developed sort of an acceleration channel up and out of it, and how we needed to stay above this in order to keep the bull market going. And it turns out that looking at history, that's not true. And so let me show you what I'm talking about. If we go all the way back to 1987, this is the 87 crash. Prior to that, we had a well-defined purple channel that we broke up and out of, right? Resistance, 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 breakthrough, support, backtest, backtest, backtest. Ugly whipsaw, and then what looked like a definitive break. But what did we trade? We traded the weekly extension. The weekly extension, is what creates the acceleration channel up out of the purple channel. And this is presumably a big five wave blow off top, right? One, two, three, four, five. And so this weekly extension traded once to and through its 618 target. It traded an extension of that extension, and that 618 target was the top in 87. And what I want to, so we came back into the purple channel, but what is important to the market at this point is the weekly extension and the acceleration channel. And we see the exact same thing going into the 2000 top. So again, well-defined purple channel that was resistance, resistance. We zoom in here. Resistance, resistance. We break through, we back test, and we're sort of here right now. We've broken out, back tested it, and then ugly, we came back in. But in this case, we had already developed a channel. This already had 2 points. This already had 2 points. The channel already existed, and we had been trading a series of weekly extensions off of this May high in 96. So it traded once to and through its 618 target. It traded twice to its 618 target, and then it traded a third time. And again, the 2000 top was a spike through the 618 target of the weekly extension. Super important, these weekly extensions. And again, what we see is we came back into the purple channel, but at this point, the weekly extension had already traded twice. And so the market didn't care about the purple channel anymore. The weekly extension was for all the marbles. And so what, which answers the question, what are we trading now? What is potentially the weekly extension that can keep this going? Or maybe we'll break this narrow channel and we'll make a broader blue channel that will trade some weekly extension. And I don't have a definitive answer to that, but we have been trading a series of weekly extensions. I had been originally thinking that this setup was a measured move from the June low to the August high, August 31st, I think. And what I now think this is a series of weekly extensions that starts here on the top of this candle 427. We traded that. I think that's the setup that traded. We might have dipped in there, retested, and then took off. And then we did get a reaction at the 618 line. And I've talked many times about this on the daily chart, the series of three extensions we got off of this anchor. The third one was this one right here that traded in, when was that? March. And we went just north of the 618 target. And so the next in the series would be off of this high here. And so you can see that the May sell-off might have dipped in, but then we retested and went. And we've gone to and through its 618 target. And so the next in the series is drawn from this May high here, high to high. And I'll draw this on the daily chart. So again, the series, it's this one to this one to this one, and now the current one. And so, what's different about this acceleration channel is how tight and narrow it is. And so, this has me wondering, is this, if we zoom out, looking at structure, if this was a big wave 3, if this was a big wave 4, ABC, and now this is a wave 5, and now we're in a wave 5 of 5, potentially, is this tight and narrow because we're already so extended that there's just no room for error up here? Or is that just a ridiculous interpretation? And is this maybe just wave 1 of 5? Right? Maybe we're going to come back into the purple channel, trade an extension off of something, and then continue in a bigger, broader acceleration channel. I don't know the answer. That's what I'm asking. And so, in the last video, I drew this 2000 to 2020 highs to highs extension, just wondering, whether this may have acted as support here along with the channel. And, these 618 targets are critical on the weekly time frame, and we have seen a reaction. So, is this all the acceleration channel we're going to get? Is this a complete wave 5 structure here, a 5 of 5, or is this a 1 of 5 and we're going to come back in? And so if we do come back in, what will be the anchor? I mean, we've gone to and through this extension target. So is it an extension here from the 2020 high to high? Could we conceivably re-enter the purple channel and bounce off of that? Or, if we draw the 2000 highs to highs, I mean, that would require us coming all the way back down to 3000. Anything is possible, but I don't see that happening. So, or are we going to find an anchor? I don't know. Maybe this will be the anchor from, again, the left side of the purple channel, the top of wave 3. Maybe that would be the anchor. So I don't know. I don't know what will trade, if it will trade. I'm just asking the question. Is this all of the wave 5 we're going to get, or is this going to broaden and we'll get a big, huge wave 5 like we did in 87 and going up into 2000? I don't know. So, but the series is what I wanted to call attention to. And then if we go to the daily chart, we've gotten an extremely well-defined trend line here. Last September, reaction, reaction, reaction here. And so it's a legitimate question. This is simply a parallel line coming off of the low at the end of last October. So we corrected last fall from the beginning of September to the end of October. Is it too symmetrical to expect the exact same thing to happen now, where we correct from the beginning of September to the end of October across the exact same channel? I mean, it's certainly, if we get down here, that is potential support, but it seems just too pat. And so, anyway, I'm not going to go through the series again, but the last extension was drawn from the May high here, and that was 32.25 to highs 49.5. And what's interesting about this level is that, you know, I don't see many people talking about this series of weekly extensions. The market was on autopilot since the May sell-off all summer long. Everyone understands that we've been trading this series. I'm not going to go through it. And each series was a 3-day pullback, 3-day pullback, 3-day pullback, 2.5-day pullback. And so this already looks different, right? This already looks like something from last fall. But it would be interesting if, everyone looking at the next measured move is saying, oh no, the setup's broken, and then we bounce hard off of the next weekly extension. There's a stealth setup there, that's all I'm saying. And then quickly, I was expecting some sort of overthrow here. And then if we go to the hourly charts and we look at RTH, regardless of how deep we correct or whether we bounce off of this next weekly extension, it just seems odd to me to expect a major market top to be the 4-hour bars from Labor Day morning, this little island top right here. That doesn't seem to be the way bull markets should end, right? And so I'm not bullish, but I am open to the possibility of getting a bounce off of this next weekly extension, and which would have a target up here. We would overthrow this blue channel, and then maybe we get some larger correction. Maybe there's one last move. I'm just throwing that out there, but I am also open to the bearish case. I'm not going to go through this in detail on the hourly chart, but we seem to have had a 5-wave move down. This is some sideways second wave corrective activity. We couldn't even make it to the 50. We found resistance at the 38.2 here. And it's possible that we get a bounce on Monday morning, and I'm sort of going to be trading for one depending on what the VIX does, if the VIX gets a reversal. And it's possible that this is the bounce on a potential bounce on Monday would be a C wave. It would be the last leg of this sideways correction here. So a bounce on Monday, it doesn't necessarily mean that that it's bullish. It could be bearish, bouncing up into midweek for the Fed. I don't know, but my ideal trading scenario: we get a Monday bounce, we hang out for maybe a day, and then we sell off again. And it's interesting quickly that in this sell-off, we never got really horrible breadth numbers on the ADD. We didn't have a day that was pegged on negative 2,000 on ADD or the NASDAQ ADQD. And we didn't get a single tick below 1,000, I don't think. The lowest tick we got was on Friday. I think it was 998. So if we rally up and start to sell off again, that would be a third wave, and that's where we would expect to see the real deep, broad selling coming out. Last thing I wanted to point out, on the tick chart, actually, I've been trading on the December contract, and the December contract did not break its 618 level during regular trading hours. If you really look at the tick chart on Friday, they defended it to the tick twice. Here was the bell, and then 2 seconds after the bell rang, they puked another 15 points. And so Sunday evening, it will be interesting to see if they hang out down here overnight, European session. Watch for this to pop back above the 618 line on Monday morning. That would be short-term bullish, meaning they want everyone to play for the bounce, but possibly intermediate-term bearish, meaning they'll run it up only to sell it again. And that's all I have time for. Thanks, guys.